Well, good morning, everybody, and thanks for joining us today. Welcome to the Clean Seas Seafood Investor Conference Call. This is Clean Seas Investor Relations Manager Tim Dorman. In a moment, I'll pass you across to Clean Seas CEO and MD David Head and the company's CFO Wayne McTurnan for a brief review of the company's progress and performance. But before we kick off, just some brief housekeeping. Appreciate analysts and investors having sent questions for management ahead of time for today's call. David and Wayne will address these as part of their discussion of the half-year results. Any call participants who have questions that they would like to ask on today's call have three options. If you're logged into the webinar platform, you can ask a question via the text box, which we will then read out on the call. Alternatively, you can click to raise your hand to indicate a question, and we can then unmute your line to let you speak directly to management. And the third option for anybody who's dialed in on their phone, you can email your questions to tim@nwrcommunications.com.au, and we will address that onto the company. Now, to kick the call with a discussion of the company's half-year results, I'll pass you across to Clean Seas CEO and MD, David Head. David.
Well, good morning, everybody, and thank you for joining us this morning. It's a privilege to be able to sit here and talk about our progress that we've made this last 6 months in the company. We've got an agenda today to take you through some of the key aspects of the business has been performing this last 6 months. And I'd like to start off, I guess, with one of the more important parts of our business, which is our sales, which I'm pleased to say have continued pretty on track as we expected. The first half revenue is up 25%. Our volumes are up 7%. You will note that our fresh volume is 6%. Representing 67% of our sales and 73% of our first half revenue. Encouragingly, our first half results in the premium frozen sector have seen a significant increase year-on-year, and have seen at higher prices. So volumes are up 47% and prices are up 40%. Equally, if we go to our farm gates, which have been a cornerstone to our improvements in profitability over the past 12-18 months, we've again continued to see improvements in our half one average farm gates, was lifted 13%, and I'm pleased to say these have continued during the first part of this quarter, and indeed we're expecting to see ongoing improvements in farm gates in this half of the year as the benefits from the new in-house processing facilities at Royal Park in Adelaide will start to come through from Q4 of this financial year. Encouragingly, we also saw, for the first time in a while, a positive first half cash flow from operations, an improvement of 3.7 million on the same half last year, where we delivered about 1.8 million of positive cash. A combination of two things, just the fact the operations were more profitable as we've got scale and improved pricing, which accounted for about half of the improvement. And the other half was accounted for through improvements in negotiations we've arranged with our creditors of the feed predominantly. I think it's important when you look at the results for any business like ours, in particular ours, that we just talk for a moment about the profile of our seasonality. Typically, one expects to see between 15 and 35% of your annual growth in the first half of the year, with 65 to 85 taking place between January and June. So, last year we had a second half statutory profit of 5.2 million, which we're expecting to be exceeded this year significantly. And that is, will be driven very largely by the growth that we're expecting to take place in the business between January and June. We talked about the last meeting about this new in-house facility at Royal Park in Adelaide. I'm delighted to tell you that all fish for the show is processed at Royal Park. A balance of our export and frozen production will be taking place exclusively from Royal Park from Q4 2018. We are nitrogen freezing equipment is actually in Royal Park now. Installation is underway. and we progressively expect to see that coming online over the next month. Just to recall, for those of you that don't know the history to this, when we made a decision to move to our new processing facility in Adelaide, we've chosen a piece of technology called rapid freezing technology using liquid nitrogen, which we believe is very, very much the best available in the world at the moment. It came about because I was actually in Italy meeting with our biggest customer in January of 2017 and was invited to have a lunch at their restaurant where they served us a platter of salmon, tuna, kingfish, lobsters and prawns and scallops, which were delicious. And I was asked by our host if we were enjoying lunch, to which we said we were. And then I was asked if we could smell the sea water, and we said yes, it was fantastic. And he explained that this product had all been frozen 2 years previously and had been defrosted for our lunch the day before. And when we began investigating it, we came across this technology called liquid nitrogen rapid freezing. The key point about this technology is that unlike the freezing technologies we use at the moment, which are a minus 35-degree blast freezer, which takes about 6 hours to get down to minus 10 degrees, from 0 to minus 10, and the minus 60-degree blast freezing, which is used by the tuna industry, takes about 4 hours to get to minus 10. This technology takes 22 minutes. And I understand what we've learned is that the quality of product that's been frozen, it depends absolutely at the speed with which you get the product from 0 to minus 10. In fact, it's 0 to minus 4 is the critical time frame. Ours does 11 minutes, and the other technologies are similar to the number I gave you previously. But from minus 10 onwards, the icicles that are being formed in the fish are smaller, and the jaggedness of the icicles, very non-technical description, are not as jagged, and which causes the damage to the flesh when it's defrosted. And a very simple test that we're able to give to our customers is to give them a frozen product of Clean Seas Spencer Gulf Massa kingfish, frozen using new technology and the old technologies. And what the chef will find is about 4 to 5 times more water, more fluid coming out of the traditional frozen product. So we think this is going to give us a really exciting advantage in the field of frozen product. The US market, where we're very small, is currently about 87% frozen. So it's a opportunity for us there. But also there's a lot of markets around the world. We are currently air freighting product at $4 to $5 a kilo twice a week. And in markets, there are certain customers that are not able to or prepared to pay the premium of our frozen product, fresh product, I should say. And we think there are a number of customers who would be very excited to explore working with our rapid frozen product. And that could bring into play a whole range of new markets, things like sushi chains and the next tier of restaurants down from the very top premium restaurants around the world. The other exciting, I think, news is that the sales and marketing relaunch that we've been talking about now for the last 6 to 12 months is now finally very much upon us. A new website launched in January, which features, and if you haven't been there, I encourage you to go and visit that. Features the new brand video we put together and 4 new endorsement videos from leading chefs. Our formal relaunch with our customers, trade, the wholesalers and distributors is now well underway. We've launched in Melbourne and Sydney, and we're in Adelaide this Friday. The response from that has exceeded my expectations. It's been incredibly encouraging. It's the first time we've done this in a long time, and they've been very excited about hearing the Clean Seas story. I think with end story going back for 10, 15 years, a lot of them had not before, had not understood the events surrounding the problem with the feed in 2008, 2012, had not necessarily understood the impact that it had on capacity to supply global markets. So it's been very exciting to see customers come to understand our story and see our new marketing initiatives, and the feedback's been very positive. Our customer relation program is happening as we speak. It's rolling out around the world this month. It is 2 or 3 months behind where I had originally hoped it would be. A number of reasons for this. One was that we changed our head of sales late in November and to make some appointments in that field shortly, so it's delayed the initiative to get that moving. Also, just the programs we're trying to pull together with a very, very small marketing team of one has been a bigger job than we originally thought it would be, but I'm delighted to say that this is now happening. We will be reaching out to 1,400 restaurants on 3 continents in the next 4 months, 500 in Australia, 495 in Europe, and 350 in North America on the West Coast. We've also recently just appointed a sales manager. The early and very, very much anecdotal responses have been significantly better than we expected. And in Melbourne and Australia, for example, we are starting at the very highest end of the market. So on one hand, the best restaurant to be succeeding with. On the other hand, they have a speed for wanting, the world's best, white fish. So that's working as we thought it would be. We've talked again for some time. We showed at the annual general meeting some samples, and we're now again weeks away from switching to our new packaging. So the white polystyrene boxes, which have been used by this industry for decades in Clean Seas situation, we'll be switching to the 100% recyclable cardboard boxes with beautiful graphics, 95% of the thermal properties of the original styrene boxes we've been using. They are more expensive, remarkably, managed to end up saving us money because they are stronger boxes and we can stack more on top of each other. So our transport cube within Australia has become more efficient. The boxes have been designed to fit into the international containers we use for air freight to Europe and North America much more efficiently, more boxes getting in there as well. So more expensive packaging, certainly dramatically more attractive and quite standard packaging. And I think wonderful for a company that's got such a strong set of credentials around sustainability and environmentalism to be able to now demonstrate the last part of our supply chain, which was perhaps somewhat of odds with that position. And our digital marketing campaign will be starting next week. We're in the process of putting together a database which has now got many thousands of contacts from our shareholders through to fund managers, travel agents, restaurants. Every contact we've got, I'll be writing to next week, inviting you to follow our digital marketing campaign. It's starting off in the first week. It's going to just introduce the Clean Seas and indeed the Spencer Gulf Aramasa Kingfish brand story, and it'll go through the elements of our product offering, and we'll be inviting as many people as we can reach to followers and to watchers during that period. So in summary, it's been a positive first half. Our sales are up 17%. Our biomass growth was much improved in the first half of last year, which you may recall struggled as there was a problem with the currents flowing around from the northwest of Australia into the Spencer Gulf, which delayed the onset of the growth season. So biomass growth is up 70%. Deal with the Japanese market. It is a very big market where about 160,000 metric tons of yellowtail kingfish are farmed each year. 95% of that is for local domestic consumption in Japan, where this is a very significant part of the everyday diet. The Japanese industry is quite different to the Clean Seas business model. First of all, they are predominantly a wild caught model, and then they range the product. And the average size of a farm over there, or the medium size of a farm, is closer to 100 tons than our 3,000 tons. So very different profile. And there tends not to be the same size businesses with ours, with the whole branding and marketing story attached to a single farm. We have not at this stage made Japan a top priority export. Although I'm pleased to say we had a team in Japan last month and indeed met with some very prestigious premium restaurants in Tokyo who have expressed interest in our product. And even though we are a much more expensive product than the Japanese, for a whole range of reasons, not the least of which the scale difference in our two production farms, but also, of course, they don't pay for feed or labor or breeding assets or costs that we have to pay for. So we're a much more expensive fish, but we were very encouraged by some of the early signs from some of those leading restaurants. And I would see the Japanese market and Tokyo as very much an issue of prestige for our brand rather than where we're going to create real value for shareholders longer term. In terms of the other Asian markets, we've been working on China for quite some time now. I think I've been there 3 times in the last 6 months, and we have another delegation of prospective partners flying down, a group of about 6 or 7 people, to Melbourne and to Adelaide and Port Lincoln later this month. And I and the chairman are hosting them in Melbourne, and then we're heading down to the new processing facilities and onto the farm and hatchery. So yes, a lot of energy is going into that. And again, I'm hoping that the new appointments we're about to make in sales will help us to focus our energies. I think Asia represents a very significant opportunity for us. I would make the point that in China, it's not a well-known species, and indeed, the job is not just to introduce the Spencer Gulf Master kingfish, but in many cases, it's to introduce the culinary flexibility of the yellowtail kingfish species. And so we see our job there as being quite broad, but the scale and the size of the market potentially should be very exciting long term. And then the rest of Asia, the rest of the Asian markets, we're also have some limited exports to at the moment, but there's been no real focus at this stage. It's all part of our next 18 months expansion program.
Thanks for that, David. The next question has come from the line of Charlie Robinson from Bell Potter. Charlie asks, can you elaborate about the extent of the competition that you're starting to see?
Yes, I mean, sadly, like every other business in the world, in Australia, it's you can't remain the only player in any attractive market for very long. And so we've seen in the last, I guess since about December, an increased presence from our competitor in Western Australia, and we are seeing fish that is certainly a bigger size than we've seen previously. It's our very clear view that the quality of our product is superior, and perhaps that's reflected in their strategy, where they're pricing at sort of $2 plus a kilo cheaper than ours. We've had some of the wholesalers move across and try their product. I'm delighted to say a proportion of those have come back to us again. So this is something that we knew would come. And we believe that the activation campaigns we're putting in place, the new branding campaigns we're putting in place, are why we are confident about our long-term prospects with this business. And I should say, as I've mentioned previously, I think, that the Century research we did last February, where we blind tested our product against the Japanese, the Western Australian farm, cobia, and 2 wild-caught species, revealed very clearly with a dozen of Australia's top chefs and food and wine writers, when blind tests, the Clean Seas Spencer Gulf Master kingfish was the preferred product. It was unanimously preferred. And so we know we've got a great product, and we know we've got a product that can attract a premium, and we've just got to work our way through this new landscape with competitors. We're also expecting Huon are probably going to launch their first harvest into the Australian market in the next quarter. Again, my view of that is that they are a very successful and a very professional farming business who we would hope would help grow this market. Long term, we still believe there is significant growth for our product overseas in both fresh and frozen, and the frozen product particularly. So growth will come in many different parts of the world in different formats over the coming years to come.
Thanks for that, David. And a reminder to all attendees, to ask a question, you can raise your hand to speak live, or you can submit via the text box. A couple of investors have texted us in asking about the southern bluefin tuna breeding program. The question is that now that kingfish sales are taking off, will research recommence into the southern bluefin tuna?
Well, research and development's never stopped with the southern bluefin tuna, and we retain all the intellectual property, we retain the brood stock, and they are, we treasure and look after these fish very, very well. It's, however, not part of our short-term or indeed medium-term plans at the moment to move back into farming of this species. Just remind everyone that doesn't know, Clean Seas was the first group in the world to close the life cycle of the southern bluefin tuna. And whilst it didn't work in the farming part of our business back in 8-9 years ago, and there were a number of factors why that might have happened, including the water temperatures, including the problems having the feed at the time. I think it's certainly on the agenda that longer term we might look for ways to create value for shareholders, potentially in collaboration or partners with others, and maybe in Australia, maybe in other parts of the world. But we do retain an important asset. But I want to make very clear to everybody, we are very much focused on the yellowtail kingfish in this business for the foreseeable future.
Thanks, David. A question's come in relating to the cash profitability of the business. The question is, are we still on track to see between $2.50 and $3 per kilo free cash from all your product in the next 2 to 3 years?
Well, I think from all our product, we said 3 to 4 years. I think we said from the large fresh product in 2 to 3 years. And yes, I've got no reason to disbelieve or have a different view of that guidance. This is about this gets driven in 2 or 3 ways. The first, of course, is by the scale of the business, producing a tipping point where your overheads that we've invested very heavily in the last 2 years, 18 months in processing, in sales and marketing, people and programs, starts to go to the tipping point where you get returns from that investment. Secondly, the pricing has increased quite significantly already in the last year, and the initiatives with the new processing facility and our ongoing pricing plans, we believe, will continue to improve our profitability through pricing. So, and then I think the other thing is just a whole new opportunities with new product developments, frozen, and then the value-added products in the coming years. We're confident we will move to that guidance, and nothing's changed since we gave it last September.
Thanks, David. We've had a couple of investors asking ahead of time about the feed litigation against Gibson's Limited. So to aggregate those questions, I would ask, what's the expected timeline for the legal proceedings against the feed supplier, and can we provide a range of potential settlements?
Well, I think starting with the second one now, the range of settlements is from nothing to a fair bit. And that's probably about as specific as I ought to be, given really this is obviously the subject of ongoing litigation, and one can never be certain about anything in litigation. I would just remind everybody that this company and this board of directors entered this litigation confident about its position, chose to fund it ourselves. When we were approached by litigation funders, we decided it was in our shareholders' interest to do the litigation ourselves. Where we're up to is that we are, I think, edging towards the end of the interlocutory stage of the litigation. We would hope that that will be completed in the next matter of months, perhaps between now and May. And we would expect that at that point, the court will then set a trial date for, I think, calendar 2018, and more than likely a mediation process between the end of the interlocutory stage and the trial date. So it's bubbling away. Every couple of times a week, I'm involved in discussions with our legal team. I've got I've got an outside advisor from a commercial perspective who's focusing on this for us to make sure we are well prepared, and I think we are. So, yeah, moving ahead, and I'm not going to start speculating on a settlement. That would be pretty foolish of me.
I think I'd agree with that, David. So another investor has asked ahead of time, Jim Wakefield has had the question relating to expansion. Are there any plans to expand potentially via acquisition?
Yes, acquisition is something that's something we would look at. I think we are clearly focusing right now on the strategy we articulated over the last 6 to 12 months, but acquisitions is certainly something we will look at. And you can never rule out or rule in any opportunities that might arise. But yeah, I'm certainly very open to those, and so is our board.
Thanks, David. And this is one that's come in on the capital structure. Michael O'Neill has asked, are there, sorry, just bear with me one moment. Are there any plans to reduce the shares on issue via a share consolidation?
Yes, it's something we've been talking about at some stage. In fact, the board did look at it during the last 6 months, but the advice was it was a bad idea to combine that with an equity raising. So yes, I think we all agree we'd prefer to be a share with a value of 70 or 80 cents or $7 rather than 6 or 7 cents. So that's clearly something on our minds and something we will come back and talk to shareholders about at the right time when the board decides it's the right time to do it.
Thanks, David. And a reminder to all attendees, you can continue to ask questions either live on air or through the text box as you desire as we go. We understand there was an audio issue where the sound dropped out for a few minutes while David was talking about the expansion opportunities in Asia. So I think this might be an opportunity just for us to revisit that very briefly. I'll just return to a question that came in from a shareholder, Michael O'Neill. And Michael asks, just in a very broad sense, what are the growth expectations in Asia?
Okay, well, my response dealt with the Japanese market earlier on and the fact that Japan is not our primary target, but there may be some premium opportunities of prestige for our brand through some high-end outlets in Japan. The interesting prospects, I think, are across the rest of Asia. And China, of course, is always one of great interest to anybody who's got a consumer product. We have a premium consumer product, the most expensive fish sold in Australia, probably one of the most expensive fish sold around the world, and therefore it's not a mass market appeal. It's where you've got to really be clear who wants your product and take the story to them and explain it to them. So in China, our job is not only to find the right distribution partners, and I think I mentioned in my earlier response that we have been working for some time now looking for the right partners, that I've been to China 3 times the last 6 months, that we have another delegation coming down later this month to talk to us about potentially being a distribution partner. I have a suspicion that the answer in China is not going to be a single solution. It's likely to be a multiple parties and multiple regions. And I think that's perhaps the way we're going to be most effective in growing our business in China. But I recognize that whilst the overall numbers are very exciting and very big, the truth is there's a slow burn here where we have to introduce the product to the chefs. It's not a natural part of their cuisine, not the way it is in Japan and to some degrees other parts of the world. So I think the opportunities are very significant and very exciting, but I don't want to start putting short, medium-term timeframes on when we're going to get to where we want to there.
Thanks, David. I think that covers things well in conjunction with your answer previously. Just a question that comes up frequently from, particularly I noticed this at the AGM in November, and this is one that's come in ahead of today, just relating to distribution and how investors can actually get the fish in their hands in an easy way. Will Clean Seas target retail distribution through supermarkets, or will the focus continue to be selling to fish wholesalers and direct to restaurants?
Well, look, if the buyers in Coles and Woolworths are prepared to pay for the most expensive fish in Australia, I'll be delighted them to have it tomorrow. But the truth is, that's not where they're positioning their fresh food offering. It may be that some of our new formats of frozen product and rapid frozen product will be very attractive to them. But again, our primary progress is the food service sectors around the world, the high-end restaurants, the sushi chains, the high-end food service outlets, catering businesses who understand our product. In time, I would love perhaps the premium retailers in Australia and certainly internationally to be able to range a group of our products. And as I said before, I think the rapid freezing technology, some of the new value-added ideas that we want to introduce in the next 18 months to 2 years could well play into that space. When we were in Europe, I think earlier again last year, we saw some very premium, incredibly expensive, well-branded, beautiful premium seafood products being sold through high-end retailers in Switzerland and Germany and the like, and therefore we think that could be a very interesting opportunity for us. I want to just deal quickly with this issue about the fact we are the most expensive fish in Australia, because it's something that I've actually been announcing at all our trade relaunches, that we were the most expensive fish, and we were proud to be the most expensive fish. Our pride comes from the fact that the market recognizes the value and the prestige of our product. We have to be the most expensive fish because this species, unlike, for example, Atlantic salmon, where the feed conversion rates are in the order of 1 to 1.1 kilograms of feed for 1 kilogram of fish, this species operates in the sort of 2.35, 2.5 kilograms of feed for a kilogram of fish. When you consider the scale of the salmon business in Australia and indeed globally to our farms and our productions, you can see again it's a very different proposition. So our job is always to be able to explain to wholesalers, to restaurateurs, indeed to consumers, why they ought to be looking to eat, stock, serve our product, because it is a special product. And that's what our marketing is all designed to do at the moment.
Thanks, David. And we've just had a couple more questions come through the text box. A reminder to all attendees, do ask any questions now. Now is your opportunity. The question relating to the production facilities in the Spencer Gulf, how do you view the company's opportunities to expand production further in the Spencer Gulf to boost output and meet growing demand?
Well, we have currently licenses for around 9,000 metric tons of production a year. And this year we're targeting production of circa 3,000 metric tons. So on the surface, as you can see, not on the surface, but very clearly, we have the scope for a significant expansion. We are, however, working now on trying to establish and build farms with greater scale at a single site than we have today. We are expanding our new farm at Whyalla from August of this year, and that starts off with a limit of 2,400 tons on the lease. But the zonal limit of where the farm is located is 4,250 tons. And last week we lodged, as part of a public call which we had asked the government to make, we lodged our application to take over the entire 4,250 metric tons so that we could build a farm with centralized feed barges, automated feeding, and much more efficient farming than we have at the moment, where in Port Lincoln we have a biomass limit of 1,750 tons spread across 4 farms. And the fourth farm, Louth Bay, is about a 45-minute steam from the main farming area on the boat. So it's a fair way to get out there. I would love to believe that the EPA and PERSA would approve us having 4,000 or 5,000 metric ton farms just off the coast of Port Lincoln. At the moment, there is no evidence that's what's going to happen. And certainly what's been happening in Tasmania, the salmon sector, would suggest that there is a lot of scrutiny about the scale and location of farms. I was privileged last week to meet the mayors and councillors of all the councils on the Eyre Peninsula who came on a boat and for an hour and a half just spent time talking to us, looking at our farm, watching our new marketing campaigns. And the response from that community of local governments has been absolutely outstanding, with offers to help us with the government agencies to get us bigger farms. I made the point to them that we don't want a farm where local communities don't want us. And I got to tell you, their response to me has affirmed very strongly just how much our local communities on the Spencer Gulf really want us to be there and to expand and to become a stronger business. Not all aquaculture businesses have that local engagement with their communities, and we're very privileged to have that. So expansion of the Spencer Gulf is an important part of our long-term strategic success. We will hopefully shortly be making an announcement about the appointment of a new head of aquaculture. This has been an appointment the company's in one form or other been trying to make for 6 years. There was a candidate, and there was an appointment for about 6 or 9 months, I think 3 or 4 years ago. Didn't work out. And anyway, I'm delighted to say I think we're very close to being able to make an announcement on that appointment shortly. And that appointment will be an important capability in our organization to work with government and to create strategy and execute the strategy for the most effective farms that we can have.
Thanks for that, David. And I think that those comments relating to expansion and also the overall growth potential. That dovetails nicely with your comments just before about the premium nature of the product, because we've just had a question come in from the line of Jethro Donahue. And Jethro's question is management concerned that its focus on high-end premium product could limit growth? And could Clean Seas expand to the size of, for example, Tassal through premium sales only?
No, I think it's unlikely we're going to become the size of Tassal in the medium term on premium sales only. But I would remind everybody that the salmon business 25, 30 years ago was pretty jolly small. Now, we're not a commodity, and I hate to in any way sound as if I'm being pejorative or even negative about salmon, but it's not the premium product that we are for the reasons we talked about a minute ago. But I do believe there is a very healthy return for our shareholders by remaining and in fact expanding our global markets in the premium sectors, and at the same time looking for ways to transition into the markets perhaps just below that ultra premium sector with things like our rapid frozen product, where you can ship stuff in a minus 35-degree container to Europe under $1 versus the $4 to $5 it takes with the air freight. So I think we're looking as creatively as we can. Future expansion may well offer us future acquisitions, could well lead us to other species that will give us scope and scale to achieve what Tassal has. But my ambition right now is to work within the reality of our resources, our product, and our very clear marketing expertise, and use that to build the best business we can.
Thanks, David. Question from the line of Guy Thornycroft. Was there anything to learn from the recent breakout of stocks from the Port Stephens holding pens of a competitor? And is there a similar threat to our stocks?
Yes, there's a number of very important learnings from that situation. I guess the first is where you put your farms is critically important. I do not pretend to understand all the facts around what happened in Port Stephens, but I recognize it's not as sheltered as where we are down in the Spencer Gulf, and I don't want to enter the conversation or even the debate as to what might have caused it. So I think location is an important part of where the farms are based. It's always a risk that events that you don't foresee could create a situation where fish can escape. And the fish escape from our cages, but not on the scale that we all saw at Port Stephens recently. We monitor them very carefully. We report them diligently to both PERSA and the other government agencies. But we have not had that experience so far. And, I'm terribly sad for the people involved up there. I know there's a lot of effort and energy gone into establishing that farm. And we did see some of that product on the market as a result of that. And, from our perspective, the product we saw was not at the quality that we are. And there are lots of reasons why that might have been. When you're harvesting fish into that environment, it's pretty stressed, we suspect. So again, before I have the highest regard for Hewitt, I'm expecting them to be a professional and hopefully a valuable contributor to the industry where we can grow the whole market by increasing the awareness.
Thanks, David. Just a couple more questions that have come through on the line. Question from the line of John Ellis Flint. Can you optimize the financial returns of the processing facility through the rapid freezing process and using the competitive advantage that you've developed with this facility?
Well, yes, this has been a very important investment for the company. We've invested around $2.5 million in the refurbishment of a brownfield site in Adelaide. We are expecting circa 50% return on that investment, so 1.2 million a year plus improvement in our profitability. We're currently utilizing 25% of the footprint of this new building with our current sort of dual processing line of the fresh and filleted products. That's running less than 5 days a week on one shift. So you can imagine the capacity to increase our volumes through that factory are very significant. The other 50% of that facility is dedicated to future expansion of value-added products. And we think that will yield whole new markets and whole new value-added opportunities. The liquid nitrogen footprint's quite small. And again, We believe this can be replicated and duplicated quite easily for expansion if our volume takes off the point where we need more rapid freezing capability. And of course, our minus 40-degree storage facility is the first one in South Australia, one of the first in the industry used in Australia. And again, we think that just all goes to deliver for us a superior product. So yes, we do think we can create a competitive advantage, and we do think we can create superior returns from that investment.
Thanks for that, David. Now, I think we're down to our final question that's come in through the text line. Just bear with me a moment while I pull it up. Just a moment. Now, this is one that you might, you may or may not be able to give a full level of colour on this question, but the question is, what is the projection for future sales revenue 1, 3, and 5 years from now?
Bigger than it is this year.
Yeah.
And then bigger and bigger. Look, we haven't given guidance out on volume beyond this year, and I think it would be foolish of me. You know, we're in a space where we've established a business in Australia. Others are following us in. There's going to be competitors, and it's going to be change the competitive landscape, of course, as a result of that. But we are sticking to, with great confidence, to our strategy and our plans. We are getting outstanding feedback from customers who hitherto had never heard of us or had never stocked our product. And the next 16 or 18 weeks, when we hit 1,400 restaurants around the world, we really want to touch the sides internationally. We certainly would have done a fair bit in Australia. So, yeah, I'm not going to be trying to draw 1, 3, and 5 year, targets into the meeting here today. But clearly, we have ambitions for significant growth into the future. Otherwise, we wouldn't be looking for larger production facilities, and we wouldn't be investing in people and resources the way we have. But again, the specific timings on this will depend upon the markets that we're facing and how we deal with it, on a day-to-day basis.
Thanks, David. Now that concludes the Q&A component of today's call. So on that note, we'll wrap things up. So thanks, everybody. We appreciate you joining us today, and we appreciate your continued interest in Clean Seas. A recording of this webinar will be made available through the ASX platform. We look forward to reporting Clean Seas' further advances this year, and we look forward to the opportunity to talk to you again. So, David, if you have any parting comments, I'll pass across to you.
No, I just thank everyone for their attendance this morning, and it's been a privilege to be able to just chat with you about where we're going and how we're going, and I look forward to talking through the full year results in 4 or 5 months. Thank you very much. Bye-bye.